Good afternoon, all. It's Barry Hemsey. It's 4:37 p.m. Wednesday, 16th of August, 2023. Housekeeping items. Again, we did release 4.95 for our. I'm sorry, 4.94. There is for our orb. It will be called 4.95 for September 1st. It's the same except one variation, which goes back to trading 2 trades a day. Right now, it's trading 1 trade a day, but it looks good. It's working fine. It's taking faster profits, so we're going to edge up. In my mind, theoretically, again, we got to give some disclosures here. In my mind, theoretically, this coming quarter should be our best quarter. As you remember, last two years, Q4 was the best quarters we had. This should outstrip those. Now, part of it is also my perception of where the volatility is going. As recently as last few weeks, you could see how we're coming into September, which is seasonality wise, historically is and that's redundancy, but historically the seasonality of September is eye catching. It's something you want to pay attention to. So if we're coming into July and August like this into September, I think it's a rock and roll time. So Orb should do really well. We'll see, especially with these couple of features we put in. But we took our time. We had a lot of comments and opinions, all that. You know me, I don't listen to any of that. I'm comfortably numb. It's a pattern in me. You got your target, you're gonna go and destroy it. Others are noise. Yes, occasionally I'll listen. All ideas are good, but until you put it on paper, and when it doesn't work, it fails. It's not my job to put somebody down. I'm not gonna do that. I'm just gonna, push it to a side for a second, go back to what I was doing. And same thing is with our programmers. So 4.94 is out. We've been testing it for several days now, about a week now. We'll probably have another week before we touch it, and then we'll prep 4.95, going from September 1st on, and that would go to 2 trades a day. Right now, because of summer, we kind of throttle back. People have said, well, for example, and I run one with double mode, the two trades. Why are we doing that now? That's after the facts. Okay? Remember, hindsight is 2020. You got to go with OR work, operation research, decisions under uncertainty. You have to make decisions while you don't know the actual results. Once it becomes a chart, it's history. Kiko would do a better job. So we're not going there yet. But we're getting ready for that. We're on the right track. PMT went flat. I'm going to discuss that. Aside from that, really nothing else is going on here. I had an interview today. Some website I've never heard about. But apparently I've done an interview with another website like 2 years ago. They'd seen me there and they said, "Can you come and help us out?" I gave them my spiel, and it should be out in a couple of days. I'm sure they're gonna hit the Twitter and all that, so you'll see it. Admiral Tico crossed over 1500. Is doing good. There we go. There's Admiral Tico. And what is it? 1501. There we go. Finally got there. Bravo. We're doing charts daily there for him, or he's doing it for me. But if you want to see some of our PMT charts, that's the place to be. Okay. Let's go to the econ calendar because we're done with the housekeeping. I really don't have much else to report. Yeah, there's one more feature we're adding to Risk Manager for Tiger Shark, but in concept it's easy. But all of these things look easy on concept. Once you put to work, look, Orb is taking us 2 years. July 16 today. Okay, here we go. July 16 today. I start writing 2 years ago today. I start writing first draft. There you go. First draft of SOW, which is statement of work. What are we trying to do? What's our target? What markets? What kind of what time of the day? is ideal, that kind of other stuff. Of course, you have to verify that through different test modes. But that was 2 years ago today. So it always looks easy. Now, these charts will be updated to 4.95. They're very, very close, but they actually, more important than this, we do have testing that's what do you call it? The actual results are posted, okay? But those are combination. Why? Because that's actually where it's tested. So when we update a code, remember that. We say that as of this, we're running that, we're running that. So as it moves up, there's no way you can backtest this. Okay. As it going forward, we are, as always, Marshall is updating it, and we're updated as of Friday, yeah. So of last week, I believe. Yeah. So that's where we are. Now, remember, we're not trading Mondays anymore for time being. We don't know when we're gonna bring Mondays back. This link is available. We posted, it's a read only, and it's Marshall's money, my code, and it's traded at Fox and Striker. So there's a bunch of people involved as a check and balance. Yeah, there's no hanky panky. Those are the results, and we have statements to back it up. Hasn't been doing great, but we went through a lot of volatility issues. We had to adjust for that. But now we're coming to the seasonality part of the year, where our historically, let's say mid-September to mid-December are going to be our best months. All right, economic calendar. Last week we talked about CPI, PPI, and everybody and his brother said numbers are good. We're going to go long. Hey Jim, how are you? All of our problems are resolved. Hey Shari, how are you? All resolved. There's blue skies. You know, was it Kavu? Ceiling and visibility unlimited. That's the Navy term. Favorite of George Herbert Walker Bush. At Kennebunkport, he had it framed, and he was on his veranda as he'd sit outside and watch. Highly optimistic. So are these people. Barry, everything is good. Don't worry. I said, really? We're near extremes. Everything I'm looking at is too high. It's time for this market to adjust. And look where we are. Look what it's done in 5 days. So retail sales was today, or was it yesterday? It was too strong, way too strong. That's why you see the Fed rates rising. And look at mortgage rates, 7% now for 30-year. So my real estate buddies who were telling me I had no clue what I'm talking about a couple of weeks ago, now they're calling. I told them I'm same guy. I still don't know what I'm talking about. Housing starts, that was today, right? Yeah. How did I miss that? I did. Sorry, let's go there. 1452. Remember, I was up. I wasn't up too late, but I was up early actually today. I was here early, around 6-something, 6:45. 1.928. So revised down. 145. This is lower. Interesting. Okay. That's the starts. How's the permits? In line, a little bit better. 64. Mixed. Okay. Okay. All right. That was housing. It starts. OMBA, industrial production. Atlanta Fed, EIA, and OFMC meeting. Okay, so hold on. Let's take a look at this quickly. Industrial production, and then I want to look at FOMC meeting. I got to read. But you're right. It was in today. Actually, Nancy this morning mentioned that in the chat. So Nancy is doing really good. She found the error in what do you call it? She found the error in ORP. Visually, she found the error in ORP. Okay. There's one thing to find the error in the code, but to find it in visually, yeah. It was a slight error. Under certain conditions, it would pop. It wasn't consistent, but in certain conditions, it was. And it was extra checksum we were doing that was unnecessary. It was left from day one. It was left from 2 years ago when we rolled out the first alpha article. Of course, this is not that code anymore. We started with something like 400 lines, 500 lines. It's over 2,000. Just in the main body of the routine, not counting the subroutines. So One of the biggest projects I've been involved with, other than B2. One of the probably biggest project in trading that I've been involved with was Orb. Yeah. Tiger Shark is a different problem. Okay, 0.5, 0.8. Revised further down. Interesting. Consensus 0.3, and it came in 1. Wow. This is what the problem is, guys. Yes. That's revised down. This and 0. Yes, this is your problem. Right there. And look at the readings we have in capacity utilization. Yeah. The Fed has to step in. No choice. No choice. Yeah. What did we said last year? Why don't you go to full point? I would do 3 months, 1% each. Just crush it. So the inflation can't come back. No, they did it too slow. They gave into politics. The politics is ruining this country. Yeah. Well, Philly Fed tomorrow. Mid-Atlantic. Yeah. 13.5, -10. I see. Okay. Ooh. Consensus range is -20. Yeah. Wow. Holy mackerel. Okay. What else we have? Leading indicators. That's what I like to look at. Even though I think it's a wrong report. You should look at this more often. It shows that a black dot, which is like not important. Wrong. 0.7, in my opinion. 0.4 negative. So it came lower. No, it came higher. Wow. Oh, wow. Wow. If this thing comes up strong, let's say if it just comes positive, 0.01, 0.02. Yeah, the rates, the yield to maturity are going to fly. Wow. Maybe I closed it too early. Here's what we sent out, so it'll be added to the PMT chart. Let me just go over this quickly with you guys. Here's just what we sent out to all PMT members saying that we went flat and we took a small loss, and then a copy was sent out to all PMT members, reminding them we're going to have this webinar here. That's Sam's finished his book. Okay. Sam is the one who wrote the first code in easy language. Yeah. He was number 3 employee at TradeStation. Yeah. Yep. Okay. That's it for tomorrow. Baker Qs, I don't care. Plus its expiration. Okay. August expiration should be quiet. We shall see. Okay. Let's go to charts. Any questions so far? Hi, Sirius. How are you? Welcome. Anybody else we need to say hello to? Okay. All right. Okay. Our first chart here, as always, timer chart. And as you know, we also added equal weighted to see, and you could see some of this a little bit more accentuated. Why? Especially to a downside, as you don't have the protection of the big caps, because the weight added is equal lane. All it's doing is you're doing an arithmetic average. It's not a market cap weighted average. Okay, just a price average. So let's go back to what we used to. Excuse me, McClellan oscillator. Just to make sure we have the latest data in now that the market has been closed for 50 minutes. 25571. Historical terms, this was in launchpad mode. Any area down here, we're in launchpad mode. It doesn't mean we're going to pop tomorrow, but it is saying 2, 3, 4 days later, onward to the right, we're going to be rotating up. We'll see. But I didn't go long. I just went flat because I still think next couple of days are going to be iffy. Because I was behind, I wanted to take a small loss, but lock it and take that pressure off of me where every day I'm checking this. Believe me, it was getting to a point where it would impact my NQ trading. And so I just said, you know what? I come first. I'll take a little loss with time and digest. our option puts were blown out anyway. So we took it. Small losses goes quickly. The bigger loss was retirement digest. But sometimes you gotta swallow your pride and say, I was wrong. This is what I'm going to do. But at least I mitigated some of the pain. You can't always win. Remember, last couple of years, what we have done, we've killed it. What was it? 10 signals, all winners. And this one, they caught me. But at least I settled this for 3%, 2.9% loss, and then step out. Because I don't mind. I'll come back again. I'll kill it. It's just that things get lined up. I was not lined up properly. Biggest problem was right here. Those in the chat room know. When I missed this, I was so pissed off. It just didn't let me concentrate on what I should be doing. And then, of course, I had other things going with Tiger Shark, this, that. So, as you know, we close our HA options, not trading it anymore. I just don't have the time. And futures gives you much, much better results without worrying about liquidity, bid ask. Because if we trade enough size, you're moving the market. You can't do that. So, in option world, that's difficult. Futures a lot easier. So we have streamlined what we're doing, learn from our mistakes, and improve. If you're not learning every day, you're near dying. You've got to learn every day. There's something new that you don't know about yourself. It's good to, focus. And that's my commitment here to myself, saying, not to you guys, to myself, that here a lesson was learned. Take action, be responsible, and move on. Okay, and you could see here we're beginning to possibly rotate up on CI diffs. You could see that drop continued. Actually, this peak was before, talk about leading indicator, was ahead of the price peak. But that told me to hold on, be a little bit patient. And then we had a gap down, went to 0 seg, -1, -2. We're going to go to -3. But along the way, we punched through 50 bar. We've been talking about it on Twitter too. Which Tico posted these charts. We post some targets, and we just said, you know what? Today's a good day. Let's wrap this up. Also, it's option expiration. It's a Wednesday. There's a lot of reversal on Wednesdays. So why? We have too many puts here now. Now everybody, we were short going up. We probably try to get long here, but here you're gonna have all these longs who got hammered, and now all of a sudden they said, "Oh, we're gonna go down." Wait a second. This is where you buy insurance, not there. So there are going to be a lot of shorts here. There's a chance it could rotate up. We'll see. What we don't have a control over, obviously, is exogenous news. News from overseas, from non-related to markets. When they come in, mix everything. Now, I know yesterday the shock was Michael Berry, his big position. This is the guy. I think he's got Asperger syndrome. I'm not sure, but he was the one playing drums in the movie Big Short. I plan to call Gil Caffrey, the owner of Front Point. They're the guys who were also short the subprime mortgages on behalf of Front Point. Sam Eisen, who worked for him, is in the movie. The guy who plays Office is playing that. Played that. You don't see Gil there, but he's not a type who's in limelight. But he's the one who was writing the checks. But I'll check to see what his position is. I doubt it that he thinks we're gonna create crater here, but we could. We'll see. Seasonality is there. I think before we drop down, there's going to be another push up, and really sucker in some longs in, and then it comes the guillotine. So I don't think we're there yet. So I'll wait for the guillotine time. Okay, and you could see CIs are beginning to slowly rotate a little bit. Okay, this of course leads. So if you look at that, I'm thinking, yeah, I better book this. I don't want this run up again. Why? Mentally, yeah. Given all this stuff I'm doing, mentally I don't want. Remember, this is for me 24/7. I work from home. We have a lot of stuff running. I work my program. I work my staff and my programmers at nighttime. Sometimes on the weekend, and then we trade on the chat room. So after a while, it gets to you. So I want to keep my sanity straight, especially come to September because of with seasonality. If you read uh, what's his name? Phil. Gosh, the guy who he wrote the chapter after Mean Master Trader. Let me see. I'm just going to real quickly. Master Traders. Dave Miller. Erlanger. As a CMT is he talked about seasonality. Erlanger, Chief Technical Officer for Johnson family that owns Fidelity, the big retirement money brokers of record or custodians of record. And the toughest month of the year historically is September, and then somewhere in October we rotate. Now there have been exceptions. 2018 was a good exception. I shorted October 1st. Why? Again, that has to do with the SKU. We've talked about it, but the signal I was getting from SKU, and then covered New Year's Eve, Christmas Eve. That was one of the biggest drops ever in the last 10 years, other than COVID. Yeah, probably second. Yeah, after COVID, biggest second total. So we'll see. But that's what my thinking is. 255 is a alert for the upside move. Look at the breadth trust is at 40. We're hitting our limits. We should rotate. Volume was good yesterday. Today was actually lower. That's another signal. Volume down to up volume was higher yesterday, a little bit lower. We're getting ready for rotate. I may be off a day. We'll see. PMT members, be prepared to get a note from me saying we're going long. I just don't know when. Okay. But the moment I make that decision, you will know. Okay. Again, this is equal weighted. Notice we did not do the bottom chart. No need to. Why? Those are internals. That has nothing to do how the price is computed. This has to do with advanced decline, up, down volume, so on and so forth. So we concentrate instead on the shape of the CI and CI diff. And it's been, notice it didn't have a gap because it's not market weighted. Yeah, market cap weighted. So didn't have a gap like this did. See that gap? This gap is gone. Why? Because it's arithmetic average. Okay. And we're probably a day from the bottom. I just want to book this. But and plus the 255 on the Becklin oscillator. Canaries in the coal mine. 2 big days so far on transportation. Tomorrow's the day 3. That could be it for rotation. We'll see. I thought Monday is going to be it. And at first it looked good, but we'll see what happened yesterday. Of course, Monday night the news came out what Barry had done, which is about 90%. Now, this guy is nuts. That's 90% of his portfolio. You can't do this with other people's money, but he does it. I wouldn't. I couldn't. I'm sure Dennis wouldn't, but this guy does it. So that's what he did also on, what do you call it? On Big Short. There were a lot of people complaining to him, but he kept up. Some of them, he bought them out, sent them out of the way, and they all regret it. So we'll see how this time is. But this is about 90% of his portfolio. In 2 puts, Qs and SPYs. He bought puts, yeah. Now I've got a couple of Trumpkins, plus also, no, I'm not talking about Dennis stuff, but we have a couple of Trumpkins here. They're also Roman, okay? They're selling puts here. I don't know what they have for breakfast. I don't want to know. All I know is that once they get to be put to them, it's not going to be cheap. Yeah. So they say we would like the discounts. So they sell a put to get a discount. How smart is that? I have no idea. Okay, let's do our count. 1, 2, 3. Okay, now we're 5-3 now, right? 1 up, all these 4s. So 4, 5, 3. We're 5 up, 3 down. So we're getting close. We're not at the bottom yet, but we're getting close. Okay, it's too early to be a bottom, but I'm not looking for a huge drop. But I do think maybe a 5% drop would be useful. At 4,600, if you take 5% out, yeah, I think we've gone through that. We're about getting there. Yeah. At 4,600, 5% drop would be 43.70. Yeah. I think they will pull up and then they probably have a bigger leg down. So a little bit early, in my opinion. Here's what we see here. This was quoted in the interview today. The 52 weeks high and low. This says we are going to go down. We're peaked. Obviously, it's a leading indicator. So price should go up first. With this not going higher, that says, yeah, we're going to go down. That started. But this is not a bottom because this is not peaked yet. Okay. If you look at historically, you'd see even there too. This is the weekly data. Okay. So this will continue to drop. This will continue to peak. Once it goes higher, then the low is in. Okay. But we have a lot of people throwing baby with bathwater outside. We're at -3 sigma on the SP1, and we hit almost 10, -10. That was another value, -10. I trade my indicators. I don't trade the price. Price pays me, but I trade the indicator. Why? Because it kept me out of trouble all these years. I didn't think I became time of the decade. These indicators are true and tested. Yeah. I mean, heck, we got the CI going back to February 2002. 21 years now. Yeah. And Ted Ketterer, money manager for Putnam, old money firm in Boston, still using it. He was my first customer, still is, for the indicator package. Yeah. So, yep. So, okay. VIX, very slow. We're not going anywhere fast. We're just going up slightly. You could see the pressure up on the CI for the VIX. Okay. So, we still have room. We're not hitting any historical. This is SCW, Sigma channel width. Min and max, we're not hitting near. So we're kind of neutral, kind of halfway between. So it probably has a little bit more room to go for this volatility to increase. Plus, Sigma levels were not there. Okay. We're still at, let's see, between 1 and 2. So 1.5 Sigma. This is 3, and that's 4. Once we get even the high of the bar touching it, then we have an excuse to say, hey, we're there. So I'm keeping it a couple of days off, get my mind off, kind of more settled, and then we'll re-engage again. Most likely we go up, we go long, I'm saying, but we need to get a little bit more flushed here. I don't need to get the bottom tick. I don't need to. I need 70% of these moves. I want the steak, not the sizzle at the periphery. Okay, as Tico says, he wants the fillet. You know, he prefers porterhouse, but I can have the prime, like a ribeye of it. He'll have the fillet. He wants the center cut. Well, I'm not Tico, so I'm still learning. Yeah. Okay. Here's the surprise of all. Now you can interpret this two ways. This is a skew. We're dropping and it's not going up. This is actually dropping. So with this value reading back on the 4th, I believe this is. Is it 4th of August? Yes, 4th of August. That says to me, somewhere in here they start buying some puts. Other money, let's say 42 to 4,000 range. Okay, maybe 4250 to 4,000 range, somewhere in that there. Okay, because you want to have a discount going in with a inexpensive money and 2 to 3 months forward. You take the cheaper money with a longer duration to be able to hold, and then you size it up. Potentially, some folks here have got a position on, and as you also hear, this is even more prominent because of the measure against itself. Because you have, remember, the best way to measure something in nature is measure against itself. That came in at 531. So June 1st, we're at 4 sigma. And a little bit higher reading. Here, we're at August 4th, we're at 3 sigma. So potentially we have some folks holding their position, and as moves down, some are cashing out. That's what this tells me. So they have to, because this is a computer at the end of the day of existing out of the money puts only. Okay, it's a tail risk, but on the downside, not upside. So to me, that this says there's some sophisticated money expecting a move down, but not a whole lot. Why? Because we just moved so little. If there was a bigger conviction by smart money, this number would be higher. And it will take its time before it drops, which is then right about the time this thing goes whoosh down. So, yes, we're not near a baby with bathwater. There's probably some profit taking. Uh, it's not as gloomy as it sounds, according to at least holdings of the big boys. That's what this is. Just what the big boys have done. It's SPX options, put options. They're not cheap. They're not SPY. They're SPX. So not for kids, as I say. I don't mean a derogatory term. I'm just saying be careful. It's expensive. You do something wrong, you're not. It's not going to be cheap. Okay. ES. Now, one of the charts we put on Twitter a couple of days ago, I apologize, was wrong for the spread. Why? And we talk about this often. You're doing a 3 months spread, but you've got to be out of the area where the rollover is happening. The rollover for VIX spreads, these VIX contracts, are second week, Friday of the second week. So that would have been last Friday. So if you put something Monday or Tuesday, this spread down here is wrong. It's close, but it's not correct. It should be long September, okay? Long Sep, short D's. This is December, okay? Long Sep, short D's. That's a floor lingo. So U23 and minus Z. The Z part is negative. That creates a spread, then you plot it. Of course, then we overlay the sigma channels on it. And that's where we are. Before, it was a little bit getting weird. Why? Liquidity was drying up. And that's because the one leg was about to expire. And it did expire this morning at 9 a.m. Eastern or 8 a.m. Chicago. But this is true value. 1.09 basically says that we're close to a low. We're not there yet. We could have a low coming shortly. We could be a day away or so, maybe 2 days. I mean, I think we're probably going to see the low if there is this week. Or we go up and then we have a bigger low to drop into, let's say, after Jackson Hole. Remember, next week should be quiet area Jackson Hole. The Fed is out of town ahead of Labor Day. Okay. Treasuries. Oh, listen, these are highest levels in 7 years. That's a ATH for 7 year of look back data. That's ATH. Whatever data you give it is going to plot the all-time high and hold it. But we look at this is 5 years. I'm saying, let's go to 7. Yeah. So you could see it's holding. It's holding. Yeah. Same value. Okay. But in our case, we have to be more than 3. Why? Pandemic. Yeah, you gotta go beyond that. So, but you could see where we are, and we're at resistance 2, resistance 3. These are monthlies. So MR3, MR2, MR1, and MR1. So we're stretched. But it looks like we're gonna punch through these, and I think I'd like to go on a limb and say, I know there's Anita here. She's gonna go nuts on me. 3 more Fed raises. Yeah, rate rises. Yeah, 3 more, not 2, 3. Yeah, because they need to crush this. Remember, the following year is what election time. Always in market timing, third year of presidential cycle is crucial. That's where the market starts moving. That's where all the politicians, all Washington, any way they can, manipulate any data they can in Washington and New York, i.e., Wall Street, to have a good year next year. For that premise to come true, they need to really crush the inflation here. Okay. Again, we did not get flush down there. So we did not. Earlier today, we were kind of lower here, but we pulled up right about here. But we pulled up early in the day, around negative 90. That's where we closed, 77s, 51. So even though we closed at the end of the day, basically what happened here is that we ran out of time. I love these scenarios. Those in the chat room, you know. In the midday, mid-afternoon, I start looking. Is it one of those days or not? That means the selling will continue until we run out of time. So we close at the end of the day. I love it. That's lights out. That's gonna have some people have a very little sleep tonight. Especially have a, let's say, macro multi-billion dollar strategy. Some part of that is in trouble today. Now, midday, there was a different story. Midday, everybody thought, yeah, is this a 30 minutes? Yeah, yeah. Okay. Huh? Hold on. Yeah, right. Okay. Uh, but when we got to about 2:30, this area, because this was a second move, it looked like possibly it could pull up. If you look at, I was heading out. I look at the CIs. CIs were shooting up. Not anymore. Look, the big boys came in the last hour as completely took control of the market. I was shooting for that. People heard me in the chat room, but I wasn't here to see it play by play. Okay, let's see what Larry's is doing. Okay, a little bit touchy here, a little bit noisy, but that's what capitalism is. It's noisy. You have a tug of war going on. So long, short, and the shorts are holding. This one is offline. I mean, it's out of bounds. It's EMD. That's um, mid caps. Yeah, yeah. Of course, all elite here is RTY. Why? Interest rates. They don't have the borrowing capability of the big market caps, so they bear the brunt of this. Now, what else we want to look at? Oh, there were some questions about Apple and also Tesla. I called some levels in the room today regarding Tesla. Here's my numbers I'm looking at. That confluence there on the weekly. So 205 to 195. That's where I think Tesla is going to go first. Now, a couple of my buddies here, I begged them to get out at 248 to 250. It was oscillating between those two last week. And they said, oh no, Farid, this is a $300 stock. I will leave it to that. Every once in a while I get lucky. Yeah. Let's see. Oh, my favorite race cars. Yeah. Sports cars. Yeah. Okay. No, we need to go here. No. Yes. Yes, we do. Okay. Let's go here. Okay. Remember what we talked about? Our levels here, and we said if we cannot get through 77, would be possibly a problem. Last week we talked about that, and look now. Now we're about to hit 55. What does 55 signify? 55 to 45 is a fair value for these. So we've given up completely all that moment we had. We're going to a very, very neutral mode. Again, it's not a price, it's a scoring indicator. Number of percentage of S&P components, okay, that are above the 200-day. It's becoming very, very ordinary. What a fast drop this has been. Okay, that's my spiel for today. To recap, we're flat here. I showed you the email. We also on Twitter did say that we have sent the note out. Obviously, the note actually goes to members, but we said it. Is that no, no? Read the email. Read the email. Read the emails. Yeah, read the email. Yep, yep, yep. We didn't say that. We didn't say. No, we're neutral. Yeah. If we choose, if we change our opinion, we will. But we're not there yet. So, follow. Don't forget to follow Admiral Tico. He costs 1,500. Okay, so finally. And he does charts now throughout the day, 1, 2, depending. Early in the afternoon, a little bit more. Sometimes after the close, but you see what he's up to. Okay, that's it for me. Any questions? As always, this is recorded and will be posted on our YouTube channel. And if the easiest thing to do is, if you don't get a chance to come to these meetings, sign up. At the moment the post processing is done, that means you're ready to play it. You get an email. Best is to use your Gmail account. Yeah. Any questions for me? Oh, one more item. In our quest to do uh, our Tiger Shark, we have a module there that does our gamma ladder. We added to that a sub module called Risk Manager because it's a little bit easier, because all the data was being extracted from TradeStation, the account information, the position, the margin use, all good stuff. Well, one of the ideas one of the programmers had was it's called margin utilization. We should put a color gradient on it. So if there was a bar that shows your that computes, actually above it is two numbers, 0 and 100. Okay, it computes how many contracts left and what's the margin utilization, and is bounded by this bar from 0 to 100%. Okay, well, he put a color gradient in there. That's actually a function in TradeStation that you could, if you have a indicator that has a set of values, and you give it min max and colors associated with min and max, it does a gradient and normalize it and moves it back and forth with color. Well, how about if we do that with CI, for example? So we begin to look at that, and I'm going to do it myself because nobody else has the code. But we'll be looking at top with color gradients on the CI, especially CI diff. So it would be red, but not as big as it's down here. Softer red, big red. Softer green, big green. As the values change. That's the next thing we're working on the side. It will be part of the Happy Expert. Well, yeah, it would be a part of the expert family of the tools. It should be very interesting. Should be very, very helpful to spot a change. For example, let's say you're trading the orb. Okay, here's the orb chart. Orb chart. Hold on. It's a 3-minute bar. So if you put one of those on, you can really get a better feel about how extensive the pressure is in front of you visually. So we had a CI here, but we color code that, or CI diff. So that's the next thing we're working on. It's not that big. It's probably easier said than done. I just need like a Saturday afternoon to test it really well and then put it out as and it would be CG. Same would be CI-CG. CI or CI diff dash CG. Color gradient. So the presentation is not a constant color, has a gradient in there. But it has to be bounded. You cannot do anything like something stupid like let's say MACD, where you have no you don't know the values are. The values are not bounded. This is bounded. It's practically 50 and 50. Realistically, actually, like 35 and 35. 35 plus, 35 negative. Designed for 100, but we've never seen 100. In 2008, I saw negative 50. Okay, in 2008, everything went to toilet. Actually, early 2009. Obama has just come in, and the Treasury Secretary, we had Tim, what do you call it? What was it? Turbo Tim. Yeah, you remember it does taxes on TurboTax. Turbo Tim. And every time we talk, the market dropped another 1,000 points. So one of those events, the negative CI reading, this level hit negative 50. That's all I've seen. So But that's our next thing we're working on. We're excited about that. It could change, not for the active guy. It would change. Hi, Julius. How are you? Hi, Julian. For the active trader, yes, it will change. If you're a casual trader, probably you don't know the difference. Okay. So, all right, guys. Thanks for being here. We appreciate it. We'll have a webinar next week. That will be our last one in August. Again on Wednesday. No, I'm sorry. We got two more. Well, one of these is gonna hit. What do you call it? Jackson Hole. We gotta look at the calendar for Jackson Hole, and it's gonna be nothing going on other than golf they're gonna play. And you're quite welcome, Dennis. Thank you for attending. And so we'll see if the need be, if anybody's gonna be around. We'll see. But we'll have one next week for sure. Probably the 30th we won't. 2 weeks from now. We'll see. Thank you again. We're going to post-process this and then upload it to YouTube. Have a great week. Be cautious. Okay. Volume is thin. Yeah, be cautious.